So there's no way I was taking a trade, getting to 5R and taking nothing off the table, right? So I was always gonna take something off at that point. Let's see how it plays out. I set my limit, beautifully price taps in, right? Beautiful. So I'm in this trade now. What's going on, family? It's your boy Romz, back again with another video. And today's trade breakdown is going to be a trade that I took yesterday on EURUSD, which was Friday. It was an 11-hour trade. I'm going to break it down. I'm going to get straight into it. All right, so let's go. So what you can see here, right? I've got it ready on replay mode as to what I saw at the beginning of the day. You can see the daily price is super bullish on EURUSD. What I did see was I saw and I noticed that we had actually tapped into this rejection block. What have I just done there? There we go. We tapped into this rejection block, right? So I knew that I thought maybe we can get a little retracement on the daily to see what happens. I know that we had this bullish order block here, which was quite clear. Had this internal sweep of liquidity, bullish order block, and well, definitely bullish, right? But maybe I thought, I was looking at sells, and I'm gonna explain why. So on the 4-hour, you had here was you had a sweep liquidity, and not quite a market structure shift on 4-hour, but you did have a market structure shift on the 1-hour, right? So the sweep, market structure shift, the low did hold. So this order block here, it did hold, right? And this actually was important in the end in regards to what I was aiming for, or long term, right? In regards to my trade. So we had the sweep, had the market structure shift, but then we had this fair value gap here on the 1-hour. It's imbalance, fair value gap. And I believe that we could maybe tap into that fair value gap, this strong high, maybe hold, and then we could plummet, break these lows, and head down into this daily bullish order block, right? It was what I was looking at. That was the best case scenario. Me being super ambitious, but I knew that we could get something, right? So what we did have was, in the back of my mind, I knew that this had held this order block here. It had this internal sweep of liquidity. And then you had the fact that it had created a new high up here, right? So I knew that it could hold, and when price came back down, it did hold here, held here again and again, right? You can see you had a clear order block here as well. But again, the market can do all sorts, right? So I was actually looking for price to take out the Asian high, which is marked out by this blue box, Asian high, and the Asian lows down here. I was looking for the price in the morning during London session to wipe out the Asian high, fill this fair value gap on the 1-hour, and then give me a sell-off, right? So what you can see here is that London kicks in, Asian low was taken, right? A little sweep of liquidity here, and then went up to make new highs. Asian high was then taken, the 1-hour fair value gap was filled, and then we can see we get this sell-off during London, right? This is during London session. If I go down to the 5-minute, you can see here, which is great price action, and to 1 minute, and this is where it gets interesting, right? This is when I started to be interested in taking a trade. So you can see here, this gray box here is the 1-hour fair value gap, right? And this was an aggressive push up. You see the price rejects and starts to fall. So what we did have was we had this price action here where price is bullish, fills this fair value gap and BPR, which is balanced price range. Balanced price range is basically two fair value gaps. You see here, up here, you've got a fair value gap here and a fair value gap there, or imbalance there and a gap here. So you got this BISI, which is buy side imbalance, sell side inefficiency, and you've got a SIRI, which is sell side imbalance and buy side inefficiency, right? So it comes up, it fills, bounces off this potential order block, and then this is where we get the market structure shift in my eyes. We had this shift here. Once you have this, once we have this fail swing, in fact it fails to make a new high, and then it rejects, breaks the structure level, For me, this is now a failure swing, and I'm now looking at a potential entry. We've got this nice sweep over here of liquidity, and that's that, right? So let's see what happens as price action progresses. Keep an eye on this, right? Because as price action progresses, you want to see a couple of things to make sure that the trade is valid. And what I mean by that is liquidity, right? Liquidity is a massive part. It's arguably the most important part of the market. Liquidity for me is more important than structure. Structure plays a massive part too, but liquidity for me is like massive, right? Or just as important, right? So as price action plays out, what you find here, which is great, is the fact that what we have here is another BPR, balanced price range. Got a BISI and a SIBI, right? BPR, and just above the below the BPR, you've got liquidity. Crystal clear liquidity, equal highs. Okay, so I looked at this now. I say liquidity just before my entry zone. Perfect. This is the inducement. The liquidity is gonna get taken. Hopefully it rejects from here and then sell off. So I set my entry just above the liquidity. Actually at the start, I think I actually entered on 508, 1.08500, and I use about a 4 pip stop loss, I believe. Yes, and targeting, I was targeting at least down here into these lows. If I go back onto the 5 minute, I said to myself, okay, down here, it's a 5R, right? I've got to take something off the table, even though I'm aiming for something a lot bigger, 10R and potentially 20R if it really does go my way. I knew that at this point here, we had this order block. We had the sweep. It swept internal liquidity, yeah, by literally a pipette, and then create a new high internally, right? So I knew we could get a response from here. You could tap into this order block and then price could go higher. So there's no way I was taking a trade, getting to 5R and taking nothing off the table, right? So I was always gonna take something off at that point. Let's see how it plays out. I set my limit, beautifully price taps in, right? Beautiful. So I'm in this trade now. Trade comes down here, and I believe it was actually 4R where I took some partials because price started playing around. But I took 25% of it off at this point. See price then taps into this 5 minute order block that I mentioned here, and then gives a response. That's internal sweep of liquidity, and then an aggressive push up, right? There was actually a second entry opportunity here, which I'm quickly going to point out, because what we had here was another BPR, the BISI and the SIBI on the 5 minute, and where I would have entered if I was if I'm honest with you, I didn't really pay much attention. But if I was more confident, I should have entered again, really, even if it was half the risk. And I could have entered here, just above this internal high. And I could have easily had the stop loss just above this candle here, because it shouldn't go above that candle here. Anyway, see how it plays out. So you can see here, liquidity was engineered. Build up, the aggressive push up into this balanced price range on the 5 minute, or fair value gap on the 1 minute, and then price then beautifully rejects again, right? Beautiful. Right, then let's talk more about me managing the trade and tell you what happened and where I went wrong, and where I could have improved. So entering the trade is one thing, but managing the trade is a whole nother thing. The amount of emotions that you have to go through and you have to manage, because you're seeing your profits go up and down. You don't want to give the market back profits. You don't want to leave money on the table. You want to close too early. You want to close too late, right? Crazy. And for me, I was proud of myself up until a point with this, because I knew what my targets were and I had my plan and I followed it, right? So I took 25% I'm going to click this because I didn't actually take this trade, but I took 25%, right, at 4R, and I wanted, once I saw it reject and it come up here and it respond to this balanced price range, and it rejects from this balanced price range and then make a new low, I was like, okay, cool, we're in the money. This low should be ran and this low should be ran. So 25% around 4 or 5R. Then once you got below this low, which I'll show you, boom, I took another chunk, maybe 25% again, And then at 10R, because this low then was ran. That was like one of my main targets as well, which kept brought me to 10R. As you can see, boom. So in total, it went down to about 11R, right? But this here was ran, and I closed the majority of my trade there. So I had about 25% left or 20% left on the trade, right? See, because I was so focused on sells, I completely missed the buy opportunity, and I was fuming with myself afterwards. Because what you've got here is, I'm going to back on 1 hour just to show you guys, okay? So you've got the structure here where, highs were made, and, this low hadn't been broken yet. Neither was this low or that low. This is the order flow, right? These lows hadn't been broken. And I was almost betting on these lows being broken to hit my final target. When, really and truly, I should have been more vigilant during New York to try and find a buy. So you can see this 1 hour order block crystal clear here, right? It taps into that. Price taps into that during New York. And what you also have here is another order block. See this 5 minute order block here? And the 5 minute? 5 minute order block right here, right? And if I was to get my Fibonacci tool, this actually falls perfectly in the optimal trade entry zone. So just below the 71% and above the 78% Fibonacci retracement area. So this is a great POI. Price taps into it at around, look, it's 9 a.m. New York time, perfect New York kill zone. So it's around 2 p.m. my time, I believe. And if I go down to the 1 minute now, this is where it gets interesting. Very interesting. This is the POI, the blue box. And then you've got the internal sweep of liquidity. And then you've got the market structure shift here. Which is a new high, right? And then you've got the build up. Because you've got, look at this channel. And you got all this liquidity as well, like around here. Like all this price action, it's just liquidity being built. And why do I believe that? Genuinely because obviously I've got hindsight as my friend because I know how this plan pans out, obviously. But you also got this fair value gap here where price hadn't yet entered, right? So you closed the bit, you got the order block, but you had this fair value gap here. You can use this as the inducement or liquidity to take into the fair value gap. And on the 30-second, it's even clearer. You got the sweep here, you got the order block here, you got the aggressive push up, and then you've got the build up. And if you backtest this enough and you've got the confidence to take these kind of trades, what you can see here is price even goes higher, takes out that high, right? And then it comes low again, shoots low aggressively, look. And taps into this gap here, fills a lot of this imbalance, and then rejects and responds. See, with the way that I trade, a lot of my entries come from sweeps, market structure shifts, and then entries, like my entry at the top. And even if I wasn't confident enough to enter here, if I was vigilant enough in watching this price action, I would have seen that price tapped in, swiped this liquidity, and we would have seen that it would have been bullish, a failed swing here, and then the fact that it went bullish again, creating another new high, I would have then entered here if I was vigilant enough. Go back to 1 minute. I would have entered here or maybe this order block. And if I want to be super safe, I could have put my stop loss below this low. Still about 5 hit stop loss if you add on spread. And then price just goes, man. And this is why I was so angry with myself, because that would have been a solid trade. And once I saw this response, I actually deleted the rest of my sells. I was like, okay, we're going higher. We're definitely going higher. And it did. The rest of Friday, it just kept going higher and higher. There's actually another trade in here that I could have taken. I won't get into that today, but went higher and higher, and I missed out on these on the buy. And you had this clear draw of liquidity, and price pretty much got to the high. Didn't quite take it, but potential of another 11R and another trade in here, which would be another, maybe 5-6R as well. But yeah, that's that. So I can't complain because I had an 11R trade, solid 11R trade. Obviously, I don't hold full volume But that's still progress. It's still a massive trade. It's still solid profits. And you know how I manage that trade, I'm quite proud of, because in the past, I've been embarrassing with my trade management, being scared and maybe going break even too soon, closing that profits too soon, holding on to my bias for too long, etc., etc. And I had a plan and I followed it. And I'm annoyed I didn't get the buyers, but hey, like life happens, So hopefully you guys enjoyed this video. It's a trade with Romz. Have an amazing weekend, an amazing trading week, and I'll speak to you all soon.